Welcome to our short-term lending webinar, where I'm delighted to be joined by Matthew Taylor, Senior Business Development Manager from Interbay. So, who are Crystal Specialist Finance? We are a specialist finance distributor with over 80 lenders on panel across our 6 main business sectors. On there we include both exclusive and semi-exclusive products and lenders. We are 100% dedicated to the intermediary, including training, BDM visits and ongoing case management and case handling. And as you can see there, we are multi-award winning. We're a family-owned business with over 200 years collective specialist finance experience. And our motto, as you can see, is making specialist finance crystal clear. This is just an example of a couple of awards that we've won over the last few years. We're passionate about specialist finance, so what does that mean to you? First of all, you've placed your trust and your customers' trust in us, so it's up to us to talk to you to provide updates on your cases and not hide behind technology. Technology is a great facilitator and an enabler, but it shouldn't replace the need for specialist people. We know we're only as good as the last case we've dealt with for you, so we want you to send the next one. So it's up to us to assist and support you throughout the life of that case, and sometimes even beyond that where needed. Our flexibility means that we can find unique solutions for your customers, and our experience means that we have relationships with many lenders that no one else in the industry has. We aim to respond quickly and to complete your case in as short a time as possible. Our model is built around basically no win, no fee. So if we don't complete your client's case, we don't earn any money. So for us, it's about making sure we can deliver and that we can deliver in a timely manner. We're very big on education. So events like this today, where we try to provide you with updates on market trends, provide you with webinars, material, information from lenders to make sure that you are one step ahead and that you can assist more and more customers when they come to see you. And specialist finance is a huge opportunity. Let's not forget that. It can appear daunting. However, we'll assist you with your current case, but also help you to find new ones as well. Any fees will be discussed and agreed up front, so there are no hidden surprises for your client at the back end. And we're all human, so we are aware that cases will hit problems. It is the nature of specialist finance that it is tricky, it is difficult in certain circumstances. So it's up to us to proactively take action to seek to resolve the issue, to provide an alternative lending solution, or give you a heads up as early as possible that this is a deal we're unable to help with. Having said that we are people focused, for us internally the work is continuing on our technology proposition. It's up to us to provide market leading specialist finance technology solutions. We use these as a way to deliver on our promises and to make our internal guys' job as easy and straightforward as possible. As you can see there, we've got over 200 years combined experience in the specialist finance sector. We don't do anything else. We don't do vanilla. We don't do insurance conveyancing or anything like that. For us, it's purely about the specialist finance market. We know our strengths. We stick to them. We do it well. So our strengths are in the specialist finance market. We know the true breadth and depth of products available. We understand each lender's appetite and we work closely with them to understand their processes to ensure we can get your deal done quickly and efficiently. So again, it's over to us to explain to you the process, timescales, what's required from you and your clients in order to get that completed. A few examples there of where we really do excel, things like adverse credit, low credit scores, tight completion deadlines, overseas borrowers, unusual property types, or where we have to consider all income sources. A quick overview for you on bridging finance. I know Matt will talk through Interbay's products and proposition a little bit later for you. We offer products from over 20 lenders within the marketplace. Loans range from 10,000 up to 30 million. There are lenders that offer desktop valuations, dual representation, no income verification. So there are various options there on the right hand side that you can see that can be available to your transaction. Rates, as you can see there, start from 0.42%. Rate isn't the be all and end all in bridging. It's all about the solution. Can the lender deliver? Can your client get the solution they're looking for? That said, rates now are dramatically low. They're nowhere near where they were a few years ago. Lenders offering rates of 0.42 seems ridiculous when we all started looking at this and it was 1.5, 1.75, etc. Loan to values go up to 75%. And again, depending on what's important to you and your client, there are things we can play with there, upfront fees, ELCs, etc., in order to make the whole proposition work. So bridging finance is something you'll have heard a lot of people talking about over the last few months. It continues to deliver funding for borrowers where traditional lenders may be more cautious or have restrictions. Especially in these changing times, the shifting sands of the market and the economy, clients may change their mind on what they want to do. Bridging loan books are currently around about 4.62 billion according to the ASTL, which is 14% up on where they were in 2019. Applications in quarter 2 were also 22.13 billion, which is a 9.7% increase on the same period. But you could use them for many different purposes. So the recent Mortgage Finance Gazette survey there showed that 25% of bridging loans were used to purchase an investment property, 18% chain break, 18% for business use, and then 39% there for various other purposes. So what that shows us is that bridging can be used for almost anything. Traditionally, people thought bridging was a product of last resort or a product to avoid where possible. But a quarter of bridging loans that were taken out during quarter two there were to purchase an investment property. It's an excellent way to either buy quickly, to take advantage of a low price or a quick purchase, or even to purchase a property that needs a bit of work, that you can do the work and then move it onto a more palatable term loan that the client can stay on. The other big USP for bridging is its speed and flexibility. So where you're looking at a chain break scenario or looking to exit development finance, you've got an auction with a 28-day deadline. You're looking to do refurbishments, either light to heavy, or you just need some cash quickly. Bridging is an ideal solution for those. So we aim to provide a quote to you within 4 hours if you're speaking to one of our underwriting team. So the next step is for the client to pay the valuation fee. Now, we collect this on application so we can move the case forward very quickly. However, there are certain circumstances where we can use a desktop valuation, sometimes called an AVM, which means that we don't need a valuation fee at all. This helps move cases along really quickly and that we can move to formal terms as quick as possible for your client. The next step obviously is to get solicitors working on it so we can instruct valuation and solicitors at the same time if needed, which can really speed up the application process. And then by using the documentation that we hold that we've provided to the lender and solicitor, then we can get funds released. Typically you're looking at 2 to 4 weeks. The quickest we've ever done is 1 day, and we've had cases that have dragged on for a year. It really depends on the client's circumstances and on what's needed. If you do need completion within 1 to 2 weeks, obviously that changes the lender set that we use. If it's a really complicated case, then that narrows the lender set down from there. If it's a really straightforward vanilla bridging loan that is just a downsize or something like that, then obviously all the lenders on panel are available. So our expertise really kicks in there in order to solve the problem. The lenders offering the lowest rates might have the tightest criteria. The lenders that are looser and will consider various different circumstances might be a touch more expensive, but it's all about getting that balance right and discussing it with you and your client in order to find the right solution for your client. Every case is different, and it does really need that personal approach in order to make them work. Bridging is obviously excellent for heavy refurbishments. So again, loans from 10,000 to 30 million. And lenders will offer dual representation, fast-track completions. We'll look at overseas borrowers and things like that. So anything light or heavy refurbishment is certainly worth a look for bridging. If it is more detailed than that, if you do need ground-up build or you're doing a full demolition and a rebuild, then our development finance team can step in and help you out with that as well. So that's why we really advocate the benefit of that call with an underwriter. There's certain things you can't put on an online application form. So for us, it's all about that personal interaction. Let's understand what you're looking to achieve. Let's understand the obstacles your client might be coming up against. And we still offer our Beat the Quote service. So because of the relationships we have, we like to think that we can't be beaten on bridging. So where it is an unregulated bridge, if you've got a quote from someone else, give us a shot. Let's see what we can do with it. If we can beat it, we will. If we can't, then we'll match it. So for us, it's about making sure that we can really deliver and add value to your proposition. So a couple of case studies here for you just to bring those scenarios to life. So a broker approached us because he was let down by a mainstream bridging lender as the case was due to fund. Now this was mainly because it did have complex income issues. It was a second charge on the main residence for a lease extension, to put the money into a new business and to purchase a buy-to-let property. So on the day of, or very close to funding, the solicitors raised a number of questions to the lender. The lender then came back and said, we're not too comfortable with the deal, we want additional evidence of this, we want additional evidence of that. And the client just didn't have the time to wait in order to provide that to the lender. So the broker rang us in a bit of a panic and said, can we get this deal done? So we took the case over at 11, and using the existing valuation and a lot of the work that had already been done, we got this funded, close of play, the same day. The broker earned the same commission as if the deal was done with lender A, with no additional fees charged. So it just shows the flexibility there, and pick up the phone, give us this scenario, warts and all. Let's fully understand the transaction. What we don't want to do is to find something out later that can then scupper the work that everyone's done on it. So let's have an open, upfront conversation. Let's fully understand what we're looking to achieve, and let's try and get that done for you. So commercial finance, we had a Monaco-based businessman, had a £5 million bridging loan on a property already, and he needed to do some refurbishment work on the property. So we managed to get that loan placed. Client was an expat, asset owned by an offshore limited company. They obtained an offshore opinion on the structure of the LLC and provided the funds to the borrower within 15 days. So very quickly then, how it all works, contact us any way that works for you. Email, portal, phone, come and visit us, see us at any of the numerous events that we do across the year. The key there is to place an inquiry with our new business team. Let's have a conversation, let's understand what you're looking to achieve. The team here will then source the most competitive product and issue the most relevant terms to you. Once you receive that, you can discuss that with your client, get them to apply, complete the application forms, pay the valuation fee where appropriate, and get that case into us. Our processing team then take over the case and will handle every step of the way there and keep you informed. Key thing with us as well is that we also work with the solicitors to get the case fully completed and funded. We don't see our job ending when an offer is issued. For us, it's about getting that money released to the client to either put into their bank account or to pay off their existing loan. And again, as I mentioned at the very start, for us it's no win, no fee. So if we don't complete the transaction, if we get all the way through to legals and then there's a hiccup, we don't earn a penny. So for us it's about working through the problems, identifying where we can fix them, where we need to come back for further information, and really looking to add value to that transaction. And there's never been a better time to look at specialist finance. The market is changing constantly. Client demographics are changing, products are changing, property types are changing. And of course, lender processes are changing and adapting. So for a mortgage broker, it is a very tricky time. So therefore, pick up the phone, speak to the team at Crystal Specialist Finance, and let us really add value and help you with those more complicated cases. Well, that's me done. So thank you for listening to my part there. Gives me great pleasure now to hand over to Matthew from Interbay, who'll talk you through their proposition. Thanks, Matt.
Hello, my name's Matt Taylor, Senior Business Development Manager for Interbay Commercial. Today I'd like to talk to you about short-term funding solutions, or as it's more commonly known in the industry, bridging finance. Today I'd like to cover the following areas: who are Interbay Commercial, why are brokers looking at the bridging sector, our popular developer exit proposition, and things to consider. So first of all, who are we? Interbay Commercial is part of One Savings Bank plc. Our family brands include Interbay Commercial, Kent Reliance for intermediaries, Prestige who offer second charge finance, and Heritable who offer development finance. Our group balance sheet stands at over 9 billion and we're the first new bank to float on the stock exchange in the last 10 years. We joined the FTSE 250 in 2015. A common theme that runs through One Savings Bank family is that brokers are our business, and providing you guys with products and opportunity to use us is at the heart of what we do. So why are brokers looking at the bridging sector, and why do we feel it's such an important tool for you to have in the kit bag when advising clients, especially in property investors? So what does the bridging sector look like out there at the moment? In 2017, the gross bridging market was worth £4.3 billion. So there's a huge market to go at with huge opportunity for mortgage intermediaries. The market has increased by over 26% since 2013, and rates on offer are now as low as 0.44 per month, with some bridging lenders even offering bespoke pricing depending on the client's circumstances and potential for repeat business. I think it's fair to say that clients' opinions on taking bridging finance has changed. Historically, it was always thought of as the last resort and quite an expensive proposition when trying to acquire property and renovate property. Recent changes to the market have seen rates much lower and clients trying bridging finance for the first time and seeing how much of a valuable tool it can be within their investment strategy. Underwriting is a lot more focused against the asset, the property itself, the exit, and probably then the borrower, as opposed to longer term finance where it's important for all three of those elements to be in a line. 83% of bridging loans are secured as first charges. So that concludes the market commentary. Let's now drill down into some further figures and talk to you about what bridging finance actually looks like for your clients. The average term for a bridge is around 11 months. The average interest rate will be 0.84%, which may come as a surprise to some people, given my previous commentary regarding the perception of bridging finance being expensive. Again, this will be dictated by client circumstances, the assets they're likely to purchase, the lender involved, speed involved. And as we stand today in 2019, the estimated gross market, £4.8 billion. The average time for completion is 43 days. 34% are for refurb projects. The average loan to value at 46%. The segment that stands out most for me on that page is the average completion time of 43 days. I think most clients would have an expectation that bridging finance needs to be fast, and in some circumstances that's absolutely true. However, as you can see, with the average time being at 43 days, that just strikes me that clients are starting to think about bridging finance earlier in the process rather than being the last resort in the transaction. So why are clients and brokers looking at the bridging sector? For many years now, you've heard lenders talk about the squeeze on property investors, with PRA changes, taxation changes, increased legislation for property investors. So bridging finance is a great way to look to enhance profits, whether it be on a refurb project or simply just being able to negotiate a lower price by completing on a property quickly. As market SLAs move outwards, the requirement for quick funding is more key than ever. Buy-to-let and commercial lending is becoming more and more specialist as the market becomes wider, and this is largely in reaction to investors seeking greater returns on their investments, better yields and diversification when selecting property. Investors are also looking to acquire assets and change the usage in order to maximise and obtain best rental income. As discussed, rates are far more competitive than they were in previous years, and clients' opinions are definitely changing of bridging finance. It's certainly becoming a go-to proposition for experienced investors. So what short-term funding options are available to you and your clients? I've broken these down into 6 key areas. The first one being light to medium refurb. Secured on an investment property where planned refurbishment works do not require planning permission or building regulations, and there is no change to the overall usage or nature of the property. For example, internal refurbishment, reconfiguration, redecoration, replacement of bathrooms, kitchens, doors, flooring, no load bearing reconfiguration. Heavy refurb, again secured on residential investment property where planned refurbishment works require planning permission, building regulations, structural works, for example loft conversions, or adding of bedrooms, for example. We would anticipate an applicant having a minimum 2 years proven track record of refurbishing properties before offering this proposition. So we're often asked what's the definition between light refurb and heavy refurb, and in summary it largely depends on the quantity of works involved, i.e. the total spend on the property, but also whether internal configuration or planning permission is required. Auction purchase, pretty self-explanatory. Clients are purchasing from auction and they need to move quickly. The loan to value will be based on the lower of the purchase price or the market value, with pressure on time to complete and potentially the property not being habitable for a mortgage term loan. This is a really useful example of where bridging finance can step in. Relatively unique, we also offer auction purchase finance on commercial mortgages. Typically the gestation on a commercial mortgage can be a lot longer than a basic residential property. Potentially there's the need for the usage of the property to be checked. If there are any occupational leases in place, these will also need checking, or adds time and puts pressure on that 28-day completion that most auction purchases will require. Short-term release of equity. An interesting proposition that we see an awful lot of brokers using, and especially investors. If they've acquired a property or they have maybe investment assets that are unencumbered, you can simply do a short-term release of equity against these finished unencumbered properties, obtain preferential rates, especially if loan to values are low. It's a great way to obtain bridging finance and obtain some of the best rates available. And finally, our developer exit proposition, which I'll spend some more time talking about shortly. You will note one key theme when selecting short-term finance. All of the options that I've talked about have a clear exit strategy, and certainly working with experienced partners such as Crystal Specialist Finance, they'll not only be able to obtain the initial bridging finance, but also the exit, which is so key to obtaining the funding and gaining approval from bridging lenders. When discussing bridging finance with your clients, that should certainly be the focus. Bridging finance should take them on a journey. They're at point A at the moment and they need to get to point B, but it's also important for the bridging lender to understand point B. Where do the clients want to end up? What are they trying to achieve? And then they'll be able to sense check the viability of that exit and that journey, and also help the clients overcome any barriers that may potentially be in place to them succeeding with their plan. So we've talked about pricing and we've talked about rates. Our bridging proposition is very much split into two halves. The buy-to-let and HMO range, i.e. residential property for investment purposes, where rates start as low as 0.44, increasing to 0.74 if you were to look at heavy refurbishment, and then the commercial and semi-commercial, limited to 70% loan to value, that gain a viable option for investors who are looking to quickly purchase commercial property or maybe make alterations to the property after acquiring to make it a more viable investment and produce greater returns. But with all of our bridging, it's non-serviced. We offer a 2% arrangement fee, no exit and no early repayment charges, and terms between 1 and 18 months. So a very flexible, short-term option with no hidden charges or hidden fees later down the line. So when we talk about bridging finance, I'm pretty sure that most intermediaries will immediately think of refurbishment of property or acquiring property quickly. But let's flip the situation on its head and let's talk about developer exit. Let's assume your client has already finished the builds, they've either refurbished or they've actually built a property, or maybe even a full-scale development. And now it's time to offload that development. It's time to exit the development. We also offer a very competitive product in this market. So picture the scene. Client's finished building, the project has reached practical completion and is ready to be sold. It's perhaps already been marketed by a local agent. So what are developers looking for? Well, every developer clearly is looking to maximise the profit on each scheme. It gives integrity to the build and means that investors realise maximum profits. All developers looking to get the right and fair price for their assets and obviously hit the budgets they previously set themselves. And some developers will be looking at the long term, especially if they're buy-to-let investors or landlords. They may well wish to retain some of the units for their own buy-to-let portfolio. So what does our developer exit solution offer? Well, it gives developers, against a GD figure, the ability to release equity for future projects. We all know that whilst developers are standing still and waiting for units to sell, they're not making money. So our developer exit proposition will allow the developer to borrow against the GDV value to either clear existing bridging finance or just simply release equity for future products. It gives them more time to make decisions, to sell off the units and achieve maximum price for them. It will allow them to avoid penalties from the development finance companies. It's a quick and efficient process whereby they're refinancing finished turnkey assets and crucially gives the site up to 18 months to realise maximum profits. Things to consider. So if you feel a client needs bridging finance, who do you go to? How do you place that deal? Are you happy specialising in other areas? And is it maybe time to diversify your business, or simply time to pair up with a specialist partner like Crystal Specialist Finance, who understand the bridging market very well and the options that are available to clients? And what should you be looking for? Quite simply, clients who wish to generate capital growth, clients who've got the ability and the skills to refurbish property, to maybe develop property. Obviously speak to your development clients. How are they seeing the market at the moment? Are they seeing any obstacles when it comes to exiting? Do they wish to hold some units, and have they maybe changed strategy in the last few years? And if they're using short-term funders, who are they using at the moment and who are they accessing? It's a very competitive market out there. But most importantly, do not miss an opportunity. Thank you for your time.
That concludes today's webinar. Thank you all for tuning in and listening. And remember, if you do have any cases you'd like to discuss, please give the guys a call, 01827 301070, and we'll be more than happy to discuss your needs with you. Thank you.